Good morning, everybody. Welcome to another market update on Blockchain Champions. Today we're going to go right into it. I'm back at home from vacation in Tuscany. I had a great time, and yeah, I really enjoyed my last market update because I think everything happened exactly as I predicted. I'm just cleaning up the chart here a bit. I want a little bit less data on it because it's a bit wild for me currently. Look at that. This is better. Yeah. So remember a week ago we were somewhere around here, hovering here, and I said we're in the middle of no man's land, and actually I expect to go lower. Especially if we touch the bottom channel, I expect to go lower. And that's exactly what happened. We've broken the channel we were in, the smaller channel, and we've actually broken below the larger channel, which has been going on for over a year now. And that's literally what I said, what I would expect it to happen. I said if we fail to show any kind of strength here, I expect to go lower. If we break through this channel, I actually expect to break below this one too. And maybe I have not used these words exactly, but I said if we break this trend channel, I would expect much lower. And that's exactly what we've gotten. What we've gotten as well, what I want to stipulate again, Bitcoin likes to wreck people. And how do you wreck people? Well, you fake out. And fake outs are something that happens a lot on the Bitcoin chart. And that's what I wanted to show here once more. I'm not gonna name names, but fuck it, I do. People like Crypto, they always trade these breakouts, and that's just the perfect way to lose money. I mean, last year here, at the July low in 2021, we had a falling wedge and everybody was expecting it to go to the upside. We broke to the downside first, only to reverse up over 50% all the way to the new all-time highs. And actually what happened here is exactly the same, but the opposite. We were in a descending wedge. We broke out to the upside with relatively low volume, without spectacular action. Look at this minimal volume compared to the days before. Yes, it's a bit more, but it's nothing to write home about. And so we've broken out the channel and we've just collapsed all the way through it in an instant. Yeah, it's just perfect. I hope you still sit in your shorts. I told you I was in my shorts. I've closed a lot of my short now. And I have a thesis which is more based on fundamental analysis at this point rather than technical analysis. Why? Everybody is saying we're going to find the floor between 32 to 28k, which makes me think that is actually not where we're going to reverse. We're either going to reverse above the 32k and leave everybody stranded in the dirt and reverse above it, or we are going to fall right below the 28k. That's what my assumption would be at this point. Of course, I would never ever trade these assumptions without any sign on the charts. But that's what I'm looking at. As a trader, at this point, you are too late to load up shorts. If we backtest a channel here or here, it's a good level to potentially look for a short again. If we bounce off this weekly, it's a good level for a long. If we bounce off this daily, this weekly is on edge. We might swing failure to it. It's in between the 32 28k regions. This daily level at 29k, I'm not too keen. If we come here, I expect us to go much lower. As in a couple of percent lower. To this order block here, or to this range here, 23k to 20k. But look, at these points, the lower we go, the more bullish you should feel. That's the mindset you should have. Why? The upside potential is only ever increasing. So the lower we go, the more bullish you become. Does it mean you have to jump in swing trades or long trades right now? No. You have to find a good level and enter the market there as a trader. As an investor, you should be overjoyed. You were willing to buy Bitcoin or any altcoin around these levels or around these levels. And now you've got an insane discount and the fundamental aspect of the market is the same or better. So as in there are more users, there's more adoption than a few weeks or months ago. So the fundamentals are better and the price is lower. So what do? You dollar cost average. This is the time to start really dollar cost averaging. I mean, we have already gone down 52%. Bitcoin can correct much more. Well, I would never expect it, to be honest, to go below 20k, but hey, that might be a reason that we actually go there. But Bitcoin surely can correct more, but that's why dollar cost average. You buy a set amount every single week, every single month, just to build your position slowly. And that's how you time the bottom of the market. You just keep buying every week, every month, every whatever you do. You buy, 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 and it doesn't matter where we end up. Because eventually the trend reverses. Oh shit. Eventually the trend reverses and you start buying up. And at some point you're like, well, my position is big enough. We've entered a significant bull run. Am I going to buy this more? Or am I going to start to sell and take profit? And then the same way you dollar cost average in, you start to dollar cost average out. The moment we come above certain levels, then you start taking profits. Why? Well, exactly because of what you see right here. We can go up in a few months and then we can fall back down. So if you don't sell parts here or on the way up, or even partly on the way down, you will never have funds, cash, dry powder to buy when you are low. And with that, we come back to our saying that you want to buy low and sell high. So if you look at this price decrease, you can say we are already buying quite low. And that's good. Yes, we can go much lower, but you will just dollar cost average your price all the way down. Now, to make it more concrete, we have had a very severe downturn here. In a couple of days, we've crashed. We've taken a downturn for 17% and alts have done much worse. So at some point you would expect there to be some sort of a bounce. And there are certain levels where I will be looking at for a bounce or for a bounce to reach. Perhaps we're going to backtest this bigger trend channel at some point. That would be a very nice level. At some point we might break through that and come to these 2 monthlies and the weekly. This would be a nice area for a short or for resistance, because I do not think that the market has turned yet over to the upside. I think there is still some more time to go. I mean, fear is at an all-time high. The stock markets are crashing like crazy. Even good stocks like Tesla, which have shown insanely good performance and profit margins, they have been decreasing in price a lot. I mean, the whole market fundamentally is going like haywire. Again, for a technical trader, this doesn't mean shit, except that you want to have a feel for the current market direction. And the market direction is down. And the easiest trades is follow the trend. So if you are in a downtrend, you look for shorts, and if you are in an uptrend, you look for longs. That's why I start with short targets where you can take a short or sell some longs if you still have them. And now we're going to look for targets where you could find a long. And targets for a long, today we're going to look at some other levels which I like in trends, downtrends like these. And these are moving averages. And we are definitely going to clean up the chart a bit more. You can remember the levels. Yeah, I was just saying, I cannot seem to find the 200 weekly moving average. Ah, there's not 200 weeks in this chart yet. Well, that's annoying. Well, because I'm trading on the Bybit chart and we don't have 200 weeks yet, we have no 200 week moving average yet. But it's around 20k at this point, 22k. And this is annoying. Look, there we are. See, 22k at another chart, which I have not used in a long time. Look, we've broken through all the moving averages except the 200 weekly moving average. And this has always been a very strong line of support during bear markets. We've ridden along it here when we broke the 6k levels in 2018, only to see it again in the COVID crash, never to touch it again. And I think we have a date with destiny, as a friend of mine likes to call it. And I think that we are going to touch upon it again. Depending on how fast we come down here, I think a good place for a long-term swing long would be a bounce off the 200 weekly moving average. So yeah, you might say at this point, well, that sounds awfully bearish. I mean, you said I have to be bullish in a market like this. Yes, bullish and patient. The lower the price go, the less risk you have of it going down, and the more upside potential you have. So, my friends, stay patient, look for your shorts until we reverse up.